Netflix, the leader in the streaming market, its stock was trading sideways for a while, but recently the stock started to move up. This has caught many investors' attention. Is this an investment opportunity in the fourth quarter? How far could the stock go further? If you are interested in holding Netflix stock for a shorter or a longer time period, what should you take note of? In order to estimate if the stock would go up and pull back in the short term and long term, we need to understand the company's business, what its challenges are, and its potential future growth. These are the crucial questions to price the stock. Over the years, Netflix has been focused on growing its global subscriber base. Netflix has been investing heavily in local language original content production worldwide. In 2020, as people were staying at home during the COVID-19 pandemic, the situation drove Netflix and other home entertainment service businesses to grow exponentially, as movie theaters, live music and sports were shut down, hence consumers watched more television. However, the situation is not so optimistic for Netflix in 2021 as the economy reopens, hence Netflix faces difficulty to maintain such a high growth year over year. Post-COVID became a challenge for Netflix to produce consistent high subscriber growth, which is a very important factor as Netflix stock performance is linked to its net subscriber additions. Even though Netflix new subscriber growth has slowed down, this does not mean the end of the company. We all know that the market situation has changed, the similar boost of additional subscribers may not happen again. However, we should not forget that Netflix's competitive advantage is it can create good and unique content. A strong content slate is important for a streaming company to fuel its subscriber growth, and there are strong indications that Netflix continues to be the leading producer of new shows and movies. Since Netflix entered the content production business, Netflix has launched quite a few hit shows, such as Stranger Things, Money Heist, Bridgerton, and The Witcher. It also has premiered popular original movies such as Bird Box, Extraction, Murder Mystery, Spencer Confidential, and The Old Guard. Netflix is dominating the streaming space, courtesy of its diversified content portfolio, which is attributable to heavy investments in the production and distribution of localized, foreign language content. Netflix plans to release at least one new original film every week in 2021. Netflix also plans to spend more than $17 billion in cash on content creation this year. Through the first half of 2021, the company spent $8 billion in cash on content creation, up 41% year over year. The most recent popular original movies include Kate, Fatherhood, and Army of the Dead. The success of TV series Squid Game, a Korean-language survival story, has already outperformed Lupin and Money Heist as the most popular foreign-language Netflix original. The success of Squid Game gave a high hope for Netflix to strengthen its subscriber growth in the Asia-Pacific region. This is definitely good for the company and its stock. According to the recent Piper Sandler semi-annual study of 10,000 teenagers in the United States. According to the survey, Netflix ranked first in streaming media consumption among teenagers, garnering 32% of total daily viewing, followed by YouTube with 30%. Hulu and Disney Plus got 8% and 7% of the market, respectively. Others, such as HBO Max and Amazon's Prime Video, contributed to the rest. However, Apple TV Plus, Amazon's Prime Video, and Disney Plus are capable of creating good content to compete with Netflix. Hence, Netflix needs to find a breakthrough in its business in order to maintain as a high-growth company and gain investors' confidence. On September 22, Netflix agreed to buy the Roald Dahl Story Company. The acquisition will add some world-famous characters to Netflix's portfolio, including Matilda, the BFG, Fantastic Mr. Fox, Willy Wonka, and the Twits. The acquisition will enable Netflix to control the rights to the author's stories and characters, which is crucial for Netflix as the company aims to produce animated and live-action films and TV shows. The deal expands Netflix's content portfolio for children and family viewers. Children and family-oriented shows have become important for streamers, having attracted more viewers as they were forced to stay at home due to disruptions caused by the pandemic. Netflix also said that it could produce games, live theater, and consumer products based on DAL's creations. Netflix officially unveiled its plans to enter the video game market in announcing second quarter earnings in July. Initially, it will start with mobile games, seeing it as a new content category that will help Netflix attract and retain customers. The games on Netflix will be included as part of the overall subscription, with no ads or in-app purchases. In September, Netflix also announced an agreement to acquire video game company Night School Studio to provide games from Night School and other developers to subscribers without any additional charge, and without ads or in-game purchases. Netflix plans to partner with other developers to create games, and some have already shown an interest. In August, Netflix launched the first Games tab in the Android mobile app for customers in Poland with 2 Stranger Things games, followed this week by a rollout of additional titles on its Android app in Spain and Italy. Netflix will continue working with developers around the world and also plan to hire talent in the game industry to deliver exclusive games as its big plan to penetrate the game industry. Since 2011, Netflix has been relying on external financing to fund its billions of dollars spending on building its library with big-budget projects and deals. Over the past years, Netflix has spent billions of dollars on licensed and original content each year to boost its catalog. Since 2011, Netflix has raised $15 billion in debt to help pay for this content. After years of borrowing to fund production, Netflix said that it will no longer depend on debt to fuel its growth. Netflix no longer needs to raise outside financing to support day-to-day operations. The company plans to reduce debt and will buy back up to $5 billion of shares in future, as Netflix is expecting to become cash flow neutral this year and cash flow positive every year after 2021. This is good news to investors, as critics who are bearish on Netflix stock always emphasize that Netflix's increasing debt load should be concerning for investors as content spending ballooned and the company burned more cash. They are also doubt that if Netflix could pay back investors on the huge money the company has spent. Netflix has emerged much stronger from the unique environment of the past year, solidifying its cash and the market position. These factors, including its superior content slate, will continue to push its company value higher and stock price to a new level. Netflix has figured out ways to maintain its status as the king of streaming. The company has been willing to consistently reevaluate its market position and approach to remain competitive. Netflix has also shown it is willing to depart from its current model of making content available all at once to the more TV-like schedule of weekly deliveries of popular shows. These innovative moves have allowed the company to enjoy strong subscriber increases in international markets. With the company's content spend forecasted at $17 billion this year, it's still possible that Netflix's growth metrics will re-accelerate in the last quarter of the year. Furthermore, Netflix's move into game industry will diversify its revenue source and could also grow its revenue further, as gaming market size is projected to reach $400 billion by 2026. Netflix plans to report its third quarter results on October 19th. That could be the next catalyst for Netflix stock. The September month and first week of October were a volatile stock market. Even though a volatile market means plenty of trading opportunities for short-term investors, long-term investors tend to prefer calm markets. Therefore, investors should understand the risks and assess if this is a good time to invest in the company's equity. I believe in short-term uncertainty possibly leading to a pullback, but remain much more optimistic about the investment opportunity in the long run. I am expecting the stock could reach $700 in 6 to 12 months. As Netflix is not a cheap stock, hence it really depends on the individual investor how much you are willing to pay for the stock. For me, I would buy if the stock pulled back to $550 range, and will add more if it goes back to $520 range. That's all for today. This is not financial advice. Hope you enjoy the video and thanks for watching through the end. Those who liked this video and who also liked my previous videos, thank you so much, folks. Those who already subscribed to the channel, thank you very much for your support. Those who prefer not to like any video nor subscribe to any channel, thanks for clicking. I am Max from Market Pulse Studio. Have a nice day, see you in the next video and thank you.